So much, Anushi, for getting us those details. Let's bring on our experts. We've got Lancelot D'Cunha, who's the CIO of ValueX Wealth Connect, and Rajesh Palviya, who's a Senior Vice President, Technical and Derivatives Research at Axis Securities. Gentlemen, thank you so much for taking the time, and apologies for keeping you waiting. Lancelot, I felt it was needed, and in fact, we chose two stocks, but there are more that are reacting very, very sharply to developments. Let's talk about the two that we've highlighted. She's in the green. Rajesh, coming to you on this one, should she book profit or should she add more at this point? She's in the green and considerably so.
So in Ambuja Cement, since this is the third consecutive month where we are seeing some profit taking is happening in this stock, though stock has moved up to the level of 700, and then since then some corrective move is coming in this stock. On the monthly chart, stock is almost trading near to its upsloping trendline support area, which is placed at around 565, 570 zone only. So I think if it slips below to 565, I think she may book some partial profit as breaking below 565 may trigger furthermore selling pressure in this counter, and possibly on the downside stock may slip further to 550, even 545 zone also. So at this juncture, I would advise 565 should be your trailing stop loss. On the higher side, if stocks crosses over 600 level, then possibly recovery would take place, and then stock may show upside momentum towards 640 to 660. But I think at this juncture, 565, looking at the market condition, 565 should be your trailing stop loss.
Right, viewers, the standard disclaimer, Ambuja Cements is also owned by Adani Group of Company, and NDTV Profit is also owned by Adani Group of Companies. But moving on, the next question is from Karuna, and her question is on Zomato. She wanted an opinion whether she should keep it or sell it. Lots happening with Zomato, fundraising on the cards especially. Rajesh, plus the results are set to declare tomorrow. But Rajesh, how does Zomato look on charts to you?
So structure, on the long-term structure, yes, it's in the bullish trajectory, but for the near-term, stock is showing some correction. In this correction, the immediate support is placed at around 245, 246 zone. So I think that level needs to watch post earnings. If it's not breaks below 245, I think there would be again opportunity to buy for trader also, as well as for the investor also, if it's not breaks below 245. At that juncture, your stop loss should be placed at around 235. On the higher side, 275 is the key supply zone. If it crosses about 275, then I think stock may attempt to again move back to the new all-time high trajectory also. So I think in decline, 245, if it comes, buy around those levels.
Okay. The next question is coming in from Subramanian, who's writing in from Chennai. He's asking about GMR Airports infrastructure, which is currently trading.
Respect to defense stocks as well for the next 3 months. So Rajesh, first of all, how does Cochin Shipyard look on charts, and any other defense stocks that one of the defense stocks that is looking attractive to you on the charts?
Cochin Shipyard is still in a downtrend, series of lower top, lower bottom formation. Stock is moving in down sloping channel on a weekly chart that clearly suggests that still stock is not showing any kind of recovery. Stock is slipped below to 20-day moving average. So on the higher side, until the stock not crosses over 1600, 1640 zone, trend is likely to remain on the weaker side, and possibly on the breakdown below 1530. Maybe we can see furthermore dip towards 1480 kind of zone. But if we analyze on the other stocks, I think one stock, Mazgaon Dock, has shown recovery in last couple of days. And in this recovery, stock managed to give breakout of falling channel on daily chart. Stock is now holding about to its near-term, short-term moving averages. So there is a sign of reversal on Mazgaon Dock. So I think here one can deploy some positional bet on this stock with stop loss of 4600 and possible target towards 5000 we can see over a period of time. So this stock is looking attractive from that defense space.
Nagarjuna from Hyderabad is asking about IRCTC, which he has bought at levels of 987.2 rupees per share. He's wondering whether he can hold or sell. So he's in the red right now. He's bought at slightly elevated levels. Rajesh, on the charts, does he protect his downside? Does he exit at this point?
I think still most of the railway stocks are still not showing any kind of major reversal or any kind of recovery. Still, most of the stocks are witnessing supply pressure. IRCTC is also in a lower top, lower bottom formation process. So I think 900 is the level. If you get opportunity around those level 900 to 920, you should try to exit, as trend is still weak. And on the downside, 850 is the crucial support area for this correction. I think if it breaks below 850, maybe furthermore downside towards 810 we can see in this stock. So weaker structure in any minor pullback towards 900, 920, one can exit if it's trading back.
All right, the next question is from Kamlesh Majithia, who's from Porbandar, Gujarat.
Its question is next. IRFC is the counter that we're looking at. 160 is the buy price. Should he add more is the question. Rajesh, on the chart, what's the view?
I think still stock is in downtrend, and looking at the near-term, short-term structure, we may see furthermore downward momentum towards.
Apologies, Rajesh, I have to interrupt you. We have